Hi, I'm Dad the Engineer. Today I'm going to explain how much the free products cost in Amazon's Vine Reviewer program. I'm assuming that you've already seen my Amazon Vine intro and invite videos, although there are links in the video description in case you missed them. In my previous videos, I alluded to the products you get on Vine as not being entirely free. On that point, you don't directly pay for the goods that you receive, but for the tax value of the item that is recorded. What that means is that you and the IRS receive a 1099 NEC form from Amazon indicating the value of the Vine items for the tax year. For your own record keeping, you can download an itemized worksheet of the items which the IRS does not receive. It's worth noting that the tax value reported for each item may not directly correspond to a price that the item was ever sold for. For example, the estimated tax value on an item that you selected may have been $200, but it was always sold with a $75 off coupon, so the most anyone ever paid was $125. Some Vine participants argue that this is unfair, but this is really just the way the program is built. The only thing you can do is to check the estimated tax value before you request the item and decide if that value is worth it to you. Back to the 1099 NEC. As the NEC indicates, this tax form is for non-employee compensation. And that makes sense, as you are not an Amazon employee, but you are receiving compensation in the form of products. The IRS sees this just like any other income. Unlike W-2 income, though, there is no federal or state withholding on this value. Amazon can't withhold anything on your behalf for taxes, as they aren't actually paying you anything that they can redirect a percentage of. This can be a problem, depending on your financial situation. You see, at the end of the year, the IRS wants to reconcile the amount of money that you've paid throughout the year with the amount that you owe at the end of the year. If you're a W-2 employee, you can see this on your paycheck. If you're a 1099 employee, you're probably making quarterly estimated tax payments to the IRS. Regardless, if you owe substantially more than you've paid, you may be subject to penalties and interest. If you're a prolific Vine participant, you may rack up $100,000 or more of this type of income in a single year, though most participants are dramatically below that number. If you have a W-2 job, you can contact your human resources representative and ask to change your withholding. Usually, you have the option of specifying a flat amount of extra withholding to take out per pay period. If you're making quarterly estimated tax payments already, you will just add to the amount that you're sending. The question of how much you need to send is a good one. There is more than one correct answer, but all of the correct answers start with an estimation of how much product value you want to get with Vine in a tax year. As an example, we can use one of my old 1099s. My Amazon Vine income was about $60,400, and my married filing jointly tax rate was 32%, resulting in a tax burden of about $19,300. I could request an additional $805 be taken out of my paycheck, or I could send the IRS a quarterly prepayment of $4,800. Alternatively, I could use the tax worksheet to pay actual rather than estimated values on my prepayments. There is a school of thought that believes that it's just fine to jam the first 3/4 of Vine estimated prepayment into the last prepayment of the year. While this may technically be within the bounds of the tax code, I definitely don't think it's within the spirit of the tax code. You see, in most other areas, the IRS cares about matching up the time phasing of the taxes paid versus the income received. It's not just an end-of-the-year thing. This is definitely an approach that could bite you later, as the IRS continues to improve their algorithmic auditing tools. Consider yourself warned. If I have good financial discipline and I expect to stay within my Vine budget, I can calculate the maximum deficit I can run without incurring penalties and interest from the IRS. In that case, I will owe tax at the end of the year, but not so much that it wasn't the equivalent of getting an interest-free loan from the government. Conversely, if I need a buffer or I really want a tax return, I can overpay. I can go on and on about why you never want a tax return, so that will be a different video, and not one specifically related to Vine. If there's one thing I hope you'll get from this video, it's that there are potentially serious tax implications in participating in Vine. They don't affect everyone equally or possibly at all, but it's good to know what they are. Adults in the United States have tax brackets ranging from 10% to 37%, with many Americans not owing any tax after their deductions. That means that Vine items cost anywhere between 0 and 37% of their value. Assuming you pay anything at all, it's still a great discount. That said, you need to know what you're getting into before you calculate your taxes at the end of the year. If you found this video to be helpful, please like and subscribe as I get this thing going. If you would like to contribute some feedback or have questions, please engage with me in the comments below. If, like me, you're a little old school, please check out my website linked in the bio. Thanks, and have an awesome day.